So we're seeing FDI flows in Africa down 21%. You know, what do you make of the environment so far in the region?
Well, I think it was expected on the back of reforms coming out of the United States of America. The tax reforms alone is enough incentive for large corporates to begin to take their money back to the U.S. environment. I think we will continue to see that until we begin to put our house in order. I think mostly the challenge we have is the volatility in an economic environment. I mean, Nigeria, for instance, now the election cycle is largely a thing of concern for most investors. And that explains why in recent times we've seen a lot of FPIs, exiting the market. Okay. FDIs, again, they look at your policy, formation. Our policy, unfortunately, the process by which we enact laws and impact and formulate policy, they have a negative impact on businesses being conducted in Nigeria. And an example is the MTN instance, for instance, and we are not excited about that because that would likely discourage foreign direct investment into the country. I'm not surprised that our FPIs had gone down, our FDIs as well had gone down. FDIs really hasn't significantly been that much coming into the country. Most of the players or most of the investment coming into Nigeria are likely FPIs. And you ask why. The reason is because in Nigeria you have regulations challenges, you have volatility economically, you also have your price, the currency stability, which to some extent we've really managed, hasn't really been that helpful.
So, but when you look at the West Africa region, we're seeing the FDI flows down 11%, to 11.3 billion. Nigeria also down to 3.5 billion. I'm looking at a country like Egypt.
Yeah.
The FDI inflows into Egypt alone is almost the size of that of the entire West Africa. So what does that say of our markets and the amount and the need to increase domestic demand?
So that's exactly what I meant by the fact that we have all this political volatility or economic volatility coming into play. FDIs that are coming into Africa is about 470 billion. A good chunk of that had gone into North Africa and Southern African countries, particularly South Africa. Just 10% of that had come into Western region. Out of that, Nigeria benefited quite some chunk out of that. And it's simply because of the policy formation. Until we're able to address our policy formation and policy consistency, you see a lot of those foreign investors shying away from Nigeria market.
Very, very, very interesting. But when you look at our investors and exporters windows and some of the initiatives that have been put by the authorities in Nigeria to, to give investors that level of confidence to come to the market, what do you think needs? What more do you think needs to be done?
So I'm happy that we're able to put, the high-knee window together, although it took us a bit of time to put that, up. But that, to a large extent, had given a lot of investors some level of confidence. And in recent times, we've seen the amount of money that had gone out of that window. In spite of the fact that our external reserves are actually depleting, the central bank has made it, a mandate to ensure that the foreign portfolio investors moving out of the country are given the level of supply of FX that they want. So I believe that going forward, that would help us in restoring the confidence after election, that foreign direct investment would like to see, and that would engender more of those flows coming into the country. For us to meet up to the likes of Egypt, there's a lot that has to be done in-house. So you cannot compare the level of investment in terms of infrastructural investment in Egypt to Nigeria. So for a long time, Nigeria had benefited from the so-called the biggest economy with our GDP size, but events have overtaken that.
Yeah. So I want to speak to the areas we're seeing these FDI flows coming in. Recently, the tech startups, we've seen a lot of massive inflows of FDI from there. We heard about Paga, we heard about Paystack, money coming in from the US and the other regions, from tech startups. How exciting do you see this space and in moving up the needle for Nigeria?
So telecoms have contributed largely to the GDP, all right? So it's moving away from sub-10 to above 10% contribution to GDP. And that's likely because, not only because of the giant telecom companies, but you have the SMEs as well coming into play. The likes of Paga and Paystack and Flutterwave that you've mentioned, we can see that there's some sort of growth going on in that space. Technology in Nigeria right now is beginning to ramp up speedily, okay? I was sharing with someone that the amount of tech hubs we have in Nigeria right now is about 53 tech hubs, okay? And that is comparable to what you have in South Africa, which is about 59. Before now, Nigeria was the sixth, largest in terms of tech hub in Africa. Now we've moved up to the second place, running after South Africa. What that means is that you're beginning to see the middle class, particularly young minds coming out of school, or coming out of the university, or moving into the tech space. And you see a lot of them do a lot of coding. Okay, so what would engender more of that to come is creating an enabling environment for them. The foreign investors are beginning to see that Nigeria is becoming like a small India in early 90s, where you see a lot of the big countries then moving into India, all right, to source for tech solutions. Right now, you're beginning to see that in Nigeria.
Finally, I just don't want to talk about FDI and not mention China, especially with the U.S. also as well, seeing that there's a huge competition of who's engaging Africa more. Yeah. So what do you make of the Chinese loans and partnerships we've been putting together?
So the Chinese loans come with two mixed feelings. Okay, one, to help you in developing the country by injecting funds into it. Well, my challenge with that is transfer of skills and knowledge and transfer of capacity. So I have a problem when you've advanced funds, but the technical expertise or capacity is not being transferred. So what that means is that you've only gone ahead to collect money, but the retention of capacity and knowledge for sustainability is not there.